Welcome back, everyone. My name's Carlos. We're with the Robinhood Stock Market Watchlist Facebook group, and today is February, Sunday the 12th, and we're going to look ahead into this week's economic reports and other activities and earnings. There's just a lot of stuff this week that's going to create a massive amount of volatility, and so one of the important things that we like to do throughout the weekend, part of our due diligence, is to always try to figure out what's going to happen before it happens. And again, that is by looking ahead at extremely important scheduled events. And we always start with economic reports. And one of the best places that we can pull that information from is the investing.com website and application. Once we're in the calendar area, we want to make sure we're on the economic calendar, and then we need to click on filters and just clear everything, because there's really only two things we need to see, and we got to put a check mark under the United States, and then under importance we'll see 1 star, 2 stars, and 3 stars. For now, we'll want to put a check mark under 3 stars because we're telling the system to pull everything that'll have the biggest impact on the United States stock market. Then click apply and let it refresh, and then we need to see everything for this week. And this is definitely a very busy week with a lot of scheduled activities. And typically we see a lot of activity or events scheduled for Tuesday, Wednesday, and a Thursday. Very rarely do we ever see anything scheduled for a Monday or Friday, but occasionally there will be. But in this case, we have starting with Tuesday. So Monday, is just kind of a day that is going to absorb, weekend news or other activity. But we may not see as much volatility. But with weekend news, especially with the third flying obstacle that was shot down north of Canada, is again creating more uncertainty, and the stock market does not like uncertainty. That creates bearish characteristics, and so we can easily see more bearish characteristics Monday morning. But it's important when we're looking at these economic reports to make sure that you are fully aware of the day and the time. When we're looking at it on the website, it says based on the Eastern time zone. But when you're looking at it on your mobile device, on the app or the tablet or phone, it's going to pull the time based on your time zone. So it's important that you know whether it's going to be released before the market opens or after the market opens. So in this case, we have 3 major economic reports that are scheduled to be released 1 hour before the stock market opens on Tuesday. So this lets us know to be prepared for a massive amount of volatility Tuesday morning before the market opens. And if this is new to you, I highly recommend you begin to start clicking on some of these very important events, because they are pretty repetitive, meaning where eventually you will remember what they are and how they will affect the stock market. For example, we'll click on the first one, the core CPI, which is the core consumer price index month over month for last month. And it tells you with a very brief description of what it is here and how it can affect the market. In this case, the core consumer price index measures the changes in the price of the goods and services, but excluding food and energy, because that's on the other report. The CPI measures the price change from the perspective of the consumer. It is a key way to measure the changes in purchasing trends and inflation. A higher than expected reading should be taken as a positive or bullish for the US dollar or the stock market, while the lower than expected reading should be taken as a negative or bearish for the US dollar or the stock market. Unless we're trying to do the opposite, unless we're trying to lower the US dollar, then it would have a opposite effect. However, we always want to try to focus on the majority of the time, and this description here is the majority of the time. However, again, sometimes we'll notice where it starts to doing the opposite, because they're trying to lower inflation, and that way that way that we can kind of move on and start recovering the market. And so at this point, it can be very, very tricky because we don't always know, will it have an opposite effect? But again, with this strategy, we always want to go with the majority. And one way to tell the difference, well, not the difference, but to tell, is it supposed to provide bearish characteristics or bullish characteristics? And we can get that information right here on the right side between the forecast and the previous results. Because if the forecast is going to be better than the previous, then that means be prepared for bullish characteristics. But if the forecast is going to be worse than the previous, then that's telling us to be prepared for bearish characteristics. And so, but the first one says the forecast is at 0.4%, and the previous is also at 0.4%. But the other ones are slightly different. We see that the CPI for month over month for January is 0.4% as well. But the previous report is at 0.1%. So this one means that it would be greater. But the CPI year over year is 6.2%, just a little bit lower than the previous. And so these are going to provide some mixed results because one is bearish and the other one is bullish. So if one could potentially outweigh the other, it would be the year over year, because the year one is I would say more potent because it's more rare. It's a yearly type of an economic report, and the more rare the economic report is, the more volatility that we're going to see out of it. So out of all of them, this one here is saying be prepared for bearish characteristics, but this other one could overpower it, because it could say, we're looking ahead here now in the near and late future. Things are starting to recover, and so to be determined. And so but Tuesday, be prepared for some possible mixed signals or some bearish characteristics. Going into Wednesday, we have 3 economic reports, but 2 of them are scheduled for 1 hour before the stock market opens, and then the other one is 1 hour after the stock market opens. And we've talked about this before, where the first hour and the last hour of the trading day are the most volatile times of the day. And you'll notice how precise these events are scheduled, because it's almost like they're scheduled intentionally to create volatility. And because if, for example, again, 1 hour before the stock market opens, they're just getting the market really going, so that way when the market opens up, we're gonna see a massive amount of volatility. Now for Wednesday, the same thing, we see the exact same type of volatility, but then after the 1 hour after the market opens, that usually we kind of see the volatility kind of mellow out. It usually whatever the price of the stock goes to after that first hour usually kind of stays there, maybe bounce around a little bit, but it doesn't usually move much until later on during power hour or something. But in this case, after 1 hour from the market open, we have crude oil inventory levels that will be released, and that will help create more volatility, whether it be in the upwards direction or the downwards direction, but we'll try to figure that out here. But for the 2 economic reports that are scheduled to be released 1 hour before the market opens on Wednesday, February 15th, we have the core retail sales and the regular retail sales. Now, the core retail sales month over month for January is forecast to be up higher than the previous at 0.7%. The previous was in negative 1.1%. And so where the retail sales month over month was at 1.6%, where the previous was also negative 1.1%. So this is basically saying people are starting to spend money. This helps the economy, unless the government and the market is knows that they're trying to crash the market or the economy, and they're intentionally trying to get this in a negative by increasing interest rates. And if they see that people are shopping, we need to keep increasing interest rates, and then the market's be like, oh man, this is just bearish. The market in Wall Street, they want to see the light at the end of the tunnel, and if things are starting to recover, too soon, that light may get longer. It that maybe get smaller, and they're like, oh man, so then they just get, and so I just don't know if we're quite there yet. So, but typically for the majority, this should provide bullish characteristics, unless again, if everyone's trying to expect the opposite. But like I said, that's what's sometimes tricky about this. But like I said, follow the majority, and because usually things happen, the majority of the time, with the way that it's supposed to. And so, but the next one is the crude oil inventories. We see that there's no forecast on there yet, but that will change usually the next day during pre-market. So we'll have to kind of take a look at that. But that's usually pretty easy to determine because usually crude oil inventories lately has had pretty big swings. It goes up a lot and it goes down a lot. But recently, it seems to be kind of mellowed out. It hasn't really made big swings lately, as gas prices have came down at certain affordable prices. And people are now going to their fuel stations weekly now. Rather than bi-weekly, because we saw one week, the oil levels would plunge, and then the next week they would surge because people were filling up their gas tank every couple weeks, and so so now the previous seems like it was on the higher side. So I would anticipate we should see something on the lower side. And for crude oil inventories and unemployment reports, these are the only two reports where we need the numbers down. The lower the numbers, the more bullish that will be for the most part. But where everything else needs to be up. And so if the crude oil inventories levels will be down, that will continue the more bullish characteristics for Wednesday, especially after the 1 hour after the stock market opens. It should continue the uptrending direction for Wednesday, unless the Wall Street and everybody already knows what's going to happen. Then the market could automatically price itself in beforehand, knowing that the crude oil inventory levels are going to provide bullish characteristics. So that's always a possibility as well. And then going into Thursday, February 16th, we have 4 economic reports, major economic reports, all at the same time, 1 hour before the stock market opens. So this is huge. This is a lot of major economic reports. So the first one is the building permits for the month of January. The previous amount was 1.337 million. And so the forecast is expected to be higher than the previous at 1.353 million. And so that is telling us be prepared for bullish characteristics. However, the unemployment report looks like it's going to be higher than the previous, but again, we need the unemployment lower than for it to be bullish. And so but again, with the whole tricky things, if that's what they're trying to do, increase unemployment, because unemployment is extremely low. I mean, unemployment used to be right around 250, 300,000 every week. This is like record breaking lows. I mean, being right around 180, 190, 200,000 people filing for unemployment across the country, of millions and millions of people. This is extremely low, and again, with all these layoffs and stuff, the government is trying to create more unemployment, and with what they're doing, it just doesn't always seem like it's working. And so, but normally, with this being higher than the previous, this should provide bearish characteristics. But if they're but this but again, like I said, the Wall Street or the government, when they see this could provide bullish characteristics, because now they're saying, high interest rates, this is starting to work now, blah blah blah, and so this is just a very tricky time, unfortunately. But again, to be determined. The next one is the Philadelphia Fed Manufacturing Index for the month of February. It looks like it's going to be negative 7.2, where the previous one was negative 8.9. And so, but at least this number is less than the previous. Which is should provide bullish characteristics as well. Then we have the PPI report for the month of January. Same thing, where we're seeing another positive, where the previous was in a negative. Forecast at a positive 0.4%, where the previous was negative 0.5%. And so, but all of these economic reports hit at the same time. It's going to hit the stock market hard, where we're going to see a massive amount of volatility, where the market will potentially shoot straight up or plunge straight down. And this is why I always highly encourage straddling, and one of the important things about straddling is to try to follow certain guidelines or rules, and but it does make straddling very much easier, straddling into a day that's scheduled with volatility, and you can see here that Tuesday, Wednesday, and Thursday is definitely scheduled for a massive amount of it. And so, and if you're not sure, if you're new here or don't know anything about stock options, options allows us to bet stocks go up as well as go down. But for the majority out there, only believe you can only pick one direction, one or the other, either up or down. However, straddling is where you're betting both a stock goes up and down at the same time. I know it may sound conflicting. Why would anyone bet a stock goes up and down at the same time? It may sound foolish, when really it's not, because you can only lose what you have on one side, but your gains on the other side are potentially unlimited. Meaning, where worst case scenario, you could lose like 100% on one side, but on a very good scenario, you can gain like 500% on the other side, or more. And what that does, it outwashes your loss on the other side and still puts you ahead on the other side. And so it doesn't matter if the stock market surges straight up or plunges straight down. It's a win-win scenario. So it does not matter what's going on, as long as the stock picks a direction and goes that way. It'll be very, very profitable, and that's why we always do this, because it doesn't, because we can try to decipher whether a day is going to be bullish or bearish as much as possible with extreme accuracy, of course. But it can easily be intercepted by other events, like that are things out of our control. With other international issues, like this whole balloon thing we're going through, or maybe Kim Jong-un with North Korea firing missiles, or whatever, the president could have a heart attack, and that could create a massive amount of volatility with the market. Things can intercept things, and we're covered when we straddle. And straddle is like an insurance play, or strategy where we have all of our bases covered. Does not matter whether the market goes up or down. It gives us something to work with, and it'll make you sleep better. So that way you're not worried overnight. Worried, did I make a wrong decision? Is the market going to go up or down? Blah, blah, blah. Now you can, like I said, you can sleep better. You can relax knowing that you are covered and you got something to work with. And so the next important thing that will create massive amount of volatility is our earnings season here. And so what we'll do is we'll go back to our group page here. I post a lot of stuff under our featured areas. When I created this group about 5 years ago or so, the featured area was kind of like my bookmarks. Anything that I saw, this was like the cloud to me. I would just save it in there. That way I can look at it later, but as well as allowing you guys to kind of look at the things that I'm bookmarking. And it just made our group very, very popular. Gave us a lot of things to talk about and to discuss, as well as our earnings. And so we have Monday, Tuesday, Wednesday, Thursday, Friday. We got our before opening, after close, and so we got a very, very busy week ahead of us here. Not just from economic reports, but we have a massive amount of earnings that is scheduled with a massive amount of volatility that we're going to talk about here. So I have the top 10 earnings analysis that we'll go over here. First one is Roku. When smart TVs came out, I mean, we saw a lot of TVs with Roku. I remember buying a little Roku box, but we had a lot of competitors, especially with Amazon Prime. We had to get the little Fire Stick. Well, now a lot of TVs start coming with the Amazon Prime software built into it. Roku was very. I remember trading Roku when it was like $20, $25, but it had just surged to hundreds of dollars, but it's plunged that since. And so, but Roku is scheduled to release their earnings on Wednesday after the stock market closes. The Roku earnings release has a 50% expecting the earnings beat. And so 50% expecting an earnings beat. Investors just do not know. I mean, this thing can go either way, in any direction, but option traders are pricing in a 16% price movement in either direction. This sounds to me like a great straddling opportunity, but as a lottery play. Lottery plays are a high risk, high reward situation because if it doesn't work out, then both the calls and the puts are going to have what's called an IV crush, which also means implied volatility crush. Because it didn't work out, both sides are greatly devalued, and so that is why we consider it as a lottery play, because a lottery play is something we invest very lightly into. Just like if as some of us got the Powerball ticket, we don't actually expect to win. I mean, yeah, it would be great, but a lot. Some of us just put in maybe a couple dollars, $5, $10, $100. We don't go full board, on buying a lotto ticket. And that's what this is, where we invest very lightly into it, hoping that we'll win, and if we do, we'll win big. And so, but again, it's a lottery play. But Roku has been very well known for volatility, so it'd be very unusual if we did not see volatility out of Roku. But recently the volatility has came down a little bit, where it averages around 10%. But we're expecting more volatility this time. So be prepared. Make sure Roku is on our watch list. Next one is Roblox. Every game obviously has its time to shine.
Sir, can I have a question?
Yes.
So, two questions. First of all, where do you take those reports from? They are very clearly and very nicely formulated.
So
Uh,
as we read the report, it does show that that they do come from the Earning Whisperer. They do have their own
okay.
website. They have their Facebook page, Twitter page, and all kinds of stuff.
Okay.
Though
Second question. Okay.
these special reports are a more of a premium thing coming from earnings report, as some of them provide free stuff like their earnings calendar, but to go more into depth into their analysis, it is something that we pay for. Though, if like the story with the Robin Hood, where how he stole from the rich and gave to the poor, that was kind of my philosophy with this group. And that's why I don't charge you guys any money. I spend money to provide you guys material so you could take advantage of it. And that's kind of my idea. So that way you don't have to spend your own money to get the same information.
Big thanks to you. Second question. How, from the past, looking at the history, uh, how accurate are those reports, and do you personally use them when you do your trades?
Oh, absolutely. Now, the neat thing with this group that I've created over 5 years ago is that and being able to offer a lot of like these chat services and stuff for free, is that it encourages everyone with a variety of experience levels to participate in this, so that way they can provide their own insight on different products and services. And but each professional trader and investor specializes in something different. They may have their different resources and stuff. And so, but through time, I've been able to analyze a lot of this information out there to see what's accurate, what's not. And with Earning Whisperer is definitely very, very accurate, and that's one of the reasons why they're so successful. And that's one of the reasons why we like to use them for our analysis information, because of how accurate that they are. And that's why I help provide this material for you guys. That way you can use it for your own advantage, because again, I had used this group originally to post my stuff on there as like a bookmark for because I use it too. I would never provide you guys something that I wouldn't use myself. And believe me, that there's a lot of people that want to promote a lot of garbage on our group, and I always tell them I would not promote something that I would not use myself. And so I have to go through a little a phase with certain developers of things to see if it's something that I would use before I promote it. So this is very, very good and highly valuable information, and it's been so much of a success for not only for them but for us, that we are one of the largest stock market Facebook groups on the internet, and the very most active, most popular. And so I definitely recommend anything that we provide here for your own benefit.
Thank you.
Absolutely. So Roblox, which is scheduled to release their earnings report on Wednesday morning, on February 15th, right before the stock market opens. And as we mentioned with these, video games and young kids, it's a phase. Even before Roblox, I don't know if you guys remember, what was it, Club Penguin or whatnot. Every game kind of has their time to shine, or what was it? What was the other, Minecraft? Every game kind of has their time to shine where they do very well, and now it's on to the next thing, like Fortnite or whatever, and then whatever the next game's going to be on that. And whatnot. And so it's where Roblox company's earning release has a 44% expecting an earnings beat, and it seems like every quarter this number is getting lower and lower and lower. And the option traders are pricing in another 15% price movement in either direction, where it's moved that before. And so this could potentially be another straddle lottery play. Because it's most likely it's going to go in the downward direction, but it does still have a possibility it could go in the upwards direction, but it's still unlikely. The next one is this Scorpio tankers. Obviously, as you can see with the picture, they transport oil, and energy's been a very big profitable thing throughout the fourth quarter, or a third and fourth quarter, like it always is. And but Scorpio Tankers is scheduled to release their earnings on Thursday morning, on February 16th, before the stock market opens. And so the company's earnings release has a 66% expecting an earnings beat. Now, regularly, these usually have an average around, it should be right around 65%. In a normal condition, in a normal world, these are usually 65%. It should be expecting an earnings beat. Any more than that should be considered above average. Any less than that should be considered below average. But option traders are pricing in around 8% price movement in either direction, where normally it's moved around 6 to 7%. So we're expecting a little bit more volatility out of this one, but it looks like it's more likely could be in the upwards direction. Next one is Monday.com. Monday, I'm not too familiar with Monday.com, but I think it's more, it's more of a business productive software thing, or CRM, or something or other, customer relations management type of software or service. But Monday.com, basically their earnings report will be tomorrow morning. So Monday morning, February 13th, the company's earning release has a 63% expecting an earnings beat, while option traders are pricing in around a 16% price movement in either direction. And lately, it's been moving around that as well, or averaging around 17% in either direction. So we'll have to see how that goes tomorrow morning during pre-market. Next one is Airbnb. And again, these financial earnings are for fourth quarter. So that is, that's your October, your November, December, and so. But with Airbnb, which a lot of people have done, lately, especially during the holidays, but. Airbnb is scheduled to release their earnings report on Tuesday after the stock market closes on February 14th. The company's earnings release does have a 53% expecting an earnings beat. So investors just have no idea which way this is going to go. It could, with 50-50 almost, it could go up, it could go down. But option traders are pricing in around a 9.3 price movement in either direction, which I would say is good territory for the straddling. Anytime I see something that's pretty close to 10% or greater, that's kind of like my little lottery play type of trigger. Any less than that, it's like because of the whole implied volatility crush, the IV crush. Definitely don't like that, because we don't want both the calls and the puts to getting crushed. But if we're anticipating a massive amount of volatility, then it's more likely that's what's going to happen. Unless, and this has happened before, where there's some weird glitch or something where in the middle of the day, where the stock market is during the middle of the session, and somehow the earnings was leaked. And all of a sudden we see this massive amount of volatility during the day, but somehow, like if the stock had plunged, somebody starts pumping it back up, and it goes on a normal level. So by the time the actual earnings is actually released the way that it's supposed to, there's no effect. And so that is when that strategy becomes invalid, because of the glitch. Or something happened that wasn't supposed to happen. So those are just things we got to look for, but that does not normally happen. What this anticipation is what normally happens, and so that is why it can help provide us some good trading plans, because the professional traders always say to plan your trades and trade your plan. Benjamin Franklin used to say, if you fail to plan, you're planning to fail. So, and that is one of the reasons why I wanted to start, a couple of years ago, these live meetings, because it's important that all of us get together with a variety of different experience levels to kind of go over certain things and to plan ahead. That way, we always know what's going to happen before it happens. Next one is the Devon Energy Corporation. They're scheduled to release their earnings report on Tuesday after the stock market opens on February 14th. The company's earnings release has an 82% expecting an earnings beat, which is probably one of the highest percentages out of all of these other earnings reports that are scheduled for this week. And so, and again, as I mentioned before, how 65% is normally average. Very rarely do we see anything, over 80%, 82%. This is good. And as a lottery play, we might as well just focus on calls. Don't straddle with this one, because I'm going to be just buying calls on this one, but lightly. It's still considered a lottery play in case things don't work out. But we are, expecting some, a good amount of movement, 6%, a little more than average, which is good. Let's bring it. 82%. I'm in on calls, so definitely on my watch list. Next one is the Cleveland Cliffs. And the pictures again can say 1,000 words. A lot of people, Cleveland Cliffs sounds like a baseball team almost. And so, but a lot of times the picture again can say 1,000 words. Kind of gives us a little bit more information on the industry. And so, digging or construction or mining is for materials is a huge thing right now. And very important as we're trying to do things more domestically. Cleveland Cliffs is confirmed to release their earnings on Tuesday morning before the stock market opens on February 14th. The company's earnings release has a 66% expecting an earnings beat, so that's good. That's average. Option traders are pricing in around an 8.5% price movement, where normally it moves around 7%. So we're expecting a little bit more movement than normal. Shopify. Shopify is expected to release their earnings on Wednesday after the stock market closes on February 15th. The company's earnings release has a 73% expecting an earnings beat, which is slightly above average. Option traders are pricing in around 11%, 11.3 to be exact, and it's lately it's been that volatile as well. So this is another a great one to some people may straddle, and you can straddle a certain ratio. You can go maybe 60-40, maybe 70-30 maybe. Or if you feel that 73% is good enough to just focus on calls, maybe do that. But just know that with calls, they will be 73% in your favor, where puts will be 27% in your favor. And so so this definitely needs to be on our watch list. Next one is Coca-Cola. Coca-Cola is expected to release their earnings on Tuesday morning before the stock market opens on February 14th. The company's earnings release has a 67% expecting an earnings beat, which is average. Option traders are pricing in right around a 3.3% price movement. Coca-Cola doesn't normally move that much. Normally it moves 1, maybe 2%. But normally Coca-Cola, it always seems like it's things are priced in kind of before before the earnings report, so it just moves a little bit. But we are expecting a little bit more out of it because of the fourth quarter earnings, and so they may talk about the yearly revenue and whatnot, and that's where we could see a little bit more volatility out of all these earnings, because they may mention the how they did for the year of 2022. And so last but not least is the Palantir Technology. They are confirmed to release their earnings on Monday after the stock market closes. So this gives a lot of us some time to to see what we want to do with this one. The company's earnings release has a 46% expecting an earnings beat, and lately it's just been kind of going downhill. And Wall Street knows it. We know this. Option traders are pricing in around a 13% price movement with this one, where lately it's been moving around that too. So with nearly a 50-50 expecting an earnings beat or miss, and expecting amount of volatility, I'm definitely in on straddling this one as a lottery play. So going very lightly, not heavy, because with our guidelines for straddling, we always want to straddle heavy on the top 3 stock options, which we'll get into here in just a little bit. The other thing that I'm going to start kind of going over is the information from the anonymous prophet. And again, this is also premium material that we'll kind of go over here. But I also want to start doing these daily meetings, as I had kind of mentioned before late last week. We do these weekend meetings. That way we can kind of go over the week. But I want to start doing these late night stock market meetings, going over information for the next trading day. That way we can kind of, many of us can watch it during pre-market before the stock market opens, and it kind of gives all of us kind of a recap. So I'm going to try that out, kind of see how that works, and that way we can kind of because ultimately, the more you learn, the more you're going to earn, and it just helps all of us. And so, but there are some very good, valuable information here, and especially as a recap. Let me take a look here. And again, we want to look for things that are going to provide a massive amount of like price movements and whatnot. Like for example, so Virgin Galactic. Wasn't part of the top 10, but it is still a very volatile stock. So on Monday it says option trading volume is elevated due to the increased level of short interest. And so it doesn't look like it's an earnings thing, but it does look like that there's something that's going to create a lot of volatility. And it says expected price movement around 12% by the end of this week. AMC, looks like option trading volume is elevated due to the company paying down another $85 million in a debt, bringing its 2022 and 2023 debt repayment to $365 million. Man, that is a massive amount of debt. And hold on here. Gotta mute someone here. Okay, so and then we talked about the Palantir Technologies, expecting a lot of volatility out of that one. You can see that we're also expecting 14% price movement on that one, where the other one confirmed like 13.5. And so and then we have ANET on Monday. They're also looking like it's going to move around about 7.9%. Let's go back up here. So Tuesday, they're going to go over basically the economic reports. We have 3 days of major economic reports that we already kind of talked about, but we don't need to kind of go over that. Let me see. Global Foundries looks like it's going to move around 8.7%. We already talked about Coca-Cola. Gilead, not going to move a whole lot. Morgan Stanley, not going to move a lot. ARK Invest looks like it's going to move around 7.1% in either direction. Upstart, my goodness, look at that. Upstart, earnings after the stock market closes on Tuesday is expected to, the price movement, 23%. So far out of everything, this has the biggest price movement. And so Upstart is UPST is the ticker symbol. Definitely that is going on our watch list. Airbnb, we already talked about that one. Suncor Energy looks like it's expected to move right around 3%. What's this here? So we have says 13F filings from hedge funds and investment managers on holdings at the end of the fourth quarter will pour in late in the day. So but we'll go over some more information on that here shortly, but to be determined. So, but obviously that is saying right here, be prepared for a massive amount of volatility during power hour, because again, as we mentioned, going over a lot of these scheduled events, these things are scheduled for for volatility reasons, and so they do schedule things for power hour to create more volatility. And so we'll go up into Wednesday here. Let's see here. So the trade desk, or the ticker symbol is TTD. Looks like they also have earnings before the stock market opens on Wednesday. And so, but we are expecting a price movement around 14% in either direction. So this is going to be another great one for straddling. But we'll want to get into it on Tuesday right before close. Roblox, we already talked about that one. Johnson & Johnson, not a big mover. Boeing.
Hello, Carlos.
Yes.
Hey, I'm sorry for that interruption.
No worries.
You said it was TTD?
Let's see here. Yes, TTD. That's the ticker name for the trade desk. And again, they are expected to release their earnings report before the stock market opens on Wednesday. But but we might as well anticipate a 50-50 earnings beat or miss. But either way, we do expect a price movement right around 14%, which is going to be a great opportunity for straddling, but as a lottery play, meaning we don't want to go heavy on it, but very, very lightly. Are you familiar with straddling?
No, but I'm getting ready to get on YouTube right after this meeting.
Are you familiar with stock options?
Yes.
You know the difference between a call and a put?
Yes.
A straddle is when we have both a call and a put on the same stock option. I know it may sound conflicting. I'm going to show you guys something here really quick. I'm going to pull it up here as an image. Hopefully you can see my screen.
I cannot, but I'm gonna watch the video.
Okay. So
later on.
Okay, good. And that way you can tune to this point here, because I'm going to show you something. Or go to the Learning Center number 2. I just uploaded it. It's an image that shows the other day with some volatility that we've been seeing with Google. In this case, Google was down about 7.5%. Okay, when you're holding both calls and puts, I always say you can only lose what you have on one side, but your gains on the other side are potentially unlimited. Meaning, in this case, with Google was down 7.5%. We lost about 95% on the calls, but our puts, we gained 534%. So what happens is that your gains outwash your loss on the other side, and it puts you way ahead. And so we want to do that, daily or regularly, especially on a day that's scheduled for volatility, because of more volatility is just in our favor. And it doesn't matter if the stock surges straight up or plunges straight down. It's a win-win scenario. Because this is like an insurance play. As long as it picks a direction and goes that way, it's a win-win.
Gotcha.
And that is why I highly recommend straddling, because it's a huge advantage. Because if we always pick one direction, there is going to be a time where it's not going to work out. And that is where it's going to be catastrophic, and you're gonna have to take several steps backward, and you're gonna have to. I mean, it's a nightmare. And so, but if we consistently do this, it's going to consistently move us forward every time. Now, sometimes, especially for trading on a day that's scheduled with nothing, and there's no movement, you're going to be at a wash. But it's better to sell, get out of it, and start over, later on, and then keep repeating this process over and over again. And of course, there is a process to this, and I'll try to paste it again in the Learning Center number 2. Let me see if I can find it here. And again, it's guidelines. Every investor and trader must have their own rules and guidelines for them to maintain consistent gains and profits. Otherwise, if you don't have rules and guidelines, you're going to be a mess, and you're just going to be all over the place, and you're just going to continually asking people questions, and you're not developing anything for yourself. So with these guidelines, and these are very, very basic, easy guidelines, but for some reason, sometimes the basic stuff people just have a hard time with because it's just too basic, it's too easy, and they think there's got to be more to it. So, but it's imperative that you understand every rule of these guidelines, because if you don't, then it's just not going to work out. And so, but it's important that you understand every rule and that you abide by every rule. And the first and number one rule is always straddle heavy on the top 3 stock options. Well, a lot of times people ask, well, what are the top 3 stock options? And so there's an area we can go where we can pull that information, and that's through, we usually like to use a website called barchart.com. It's another free website that we can utilize for our advantage. There are other websites you can utilize, but this seems to be the most user-friendly one. With barchart.com, there's a menu bar that we can click on for options, and then we can click on most active options to pull the entire system's most active stock options, and it shows right here for the top 3 for Friday was Tesla, Nvidia, and Apple. Lately it's been Tesla, Apple, and Amazon, but just like I've said in our previous meetings, that these are kind of like athletes. So, for a while, or for many years, we'll have a particular athlete where it's his time to shine, but eventually that athlete needs to retire or whatever, and there'll be a new company that'll be the number 1 or 2 or number 3 for many years, and then another company will take its place, and so on and so on. So eventually these do change from time to time, but like I said, in the last year it's been Apple, Amazon, and Tesla. But sometimes the semiconductors come in there, like AMD or Nvidia. But for Friday, it was Tesla, Nvidia, and Apple. But last week it was also Google. Google was kind of in the number 2, number 3, and that is why I was showing you the example of Google, because it was within the top 3, and that was one of the part of our rules, is to always straddle the top 3 stock options. It doesn't have to be the number 1. Sometimes Tesla is too expensive. That's fine. One of them is usually going to be more expensive over the other one. One of them is going to be more affordable over the other one. Like Apple will be more affordable than the other ones. Amazon will be more affordable than Apple or Tesla. So you have to kind of utilize with what you can use. But after a while, when you become a high roller, then you want to use the high roller type of stock options and go with the Tesla. Because you once you start trading like thousands or tens of thousands of dollars worth of contracts, we want to have the least amount of contracts. Because if we have too many contracts, like if you're trading hundreds of contracts, they don't always execute at the same time. You have these partial little sections that get executed, and that's a pain in the butt. So to try to minimize the amount of contracts executed, we have to go with more of an expensive contract, and that's when we may have to move from these less expensive contracts with more expensive contracts. That way we can reduce the amount of contracts that we have at a time. And so, but this is where we get that top 3 stock options information is from the bar chart website. So that answers rule number 1. Rule number 2 is the strike. So a lot of people ask, what strike price should I do? Should I do way over here or way over there? No. Rule number 2 says strike price should always be at the share price. Always be at the money, which is right at the share price. If you go too far, or if you're away from the share price, what's going to happen is that you're going to suffer more time depreciation, and we don't want that. We want to try to control that time depreciation by applying these guidelines. And so if we stay at the money, even if the share price isn't moving anymore, it's going to maintain the value of that contract, meaning where it's not going to depreciate as well as the other ones that you could have picked. And so that's why we always want to be at the share price. If you go beyond that, you're at risk. You're you're not following the rules here. I mean, you could still potentially do well with it, but if it doesn't work out, it's going to depreciate, and you should have follow the guidelines. Rule number 3, because a lot of people ask, what about expiration date? Should I be a couple weeks from now? Should I be a month from now? Rule number 3 says always at the soonest expiration date, because of the more volatility, and that's what we want. We want the more volatility, the better. We want these big, massive swings that we've been kind of talking about, because these amount of volatilities is just in our favor. If we pick expiration dates that are weeks from now or a month from now, not only is it going to be more expensive for that contract, but it's not going to move much. You may lose 10% on one side, but you may have gained 10% on the other side. It doesn't really do much. We want that, this scenario where we just lost 95% on one side, but we just gained 500% on the other side. That's what we want right there. And so the next rule is the rule number 4: buy straddles 15 minutes before close and then sell them the next morning within the first hour. Now, a lot of people ask why, and because a lot of people want to buy in the morning. They think that's the time to buy. No. That's the time to sell, not to buy.
Oh.
So because we've mentioned how the first hour and the last hour are the most volatile times. And so we want to use that for our advantage. So as we straddle, that means we bought 15 minutes before close the previous day, so we have something to work with. We have both calls and puts. We have volatility. So sometimes if we're utilizing moving averages, we can control that a little bit. Moving averages meaning like let me see if I can pull up something here. Like what do I have here? So Apple. Let me pull up Apple here. Let me see here. So moving averages are these moving average lines that help provide us, with buying and selling signals. It lets us know, is the stock trending upwards? Is it trending downwards? And so, hold on here. I'm just messing it up here. So this is Apple here, and so and that's why, again, we need to listen to it to see. But if you're not utilizing moving averages, you want to sell your calls and puts at the same time. But if we are utilizing moving averages, it gives us a little bit of an advantage. That way we can buy and sell at different times. So if we're buying during during power hour, the last hour of the day, sometimes we can buy like if the stock is about to go up 1 hour before the stock market closes, we can start to buy calls. And then as the stock goes up right before close, now we have profit, we have gains in the calls, and then we buy our puts. So we don't, and then the puts are whatever, it's a wash because it hasn't really moved much because we bought it minutes before close. But at least we're going into the next day with some gains on our hands. And then so when the market opens, the market could easily, will provide us more buying and selling signals, and that allows us to sell at different times, to allowing us to maximize our gains on one side and minimizes our losses on the other side. And sometimes we can turn that loss into a gain, because what if the market does open in the red, and we sell our puts and secure those gains, but then the market and the stocks begin to recover. Now they're in the green. And so now we can profit from both sides by utilizing moving averages. But if you're not good at moving averages, or just don't want to learn moving averages, or just don't have time for it, then just sell or buy and sell at the same time. So this strategy can work for different people and different strategies and different experiences levels, and so but but it's just weird how a lot, and I thought it too when I mastered penny stocks, trading penny stocks during pre-market and whatnot. It was always during early in the morning. But as we're into stock options and utilizing this stuff, this is, it's important to sell what we have during the market volatility in the morning. That way we can take advantage of that. Now, and again, it says here, so buy straddles 15 minutes before close to sell them the next morning within the first hour. Because, again, the first hour and the last hour have the most volatile times. Usually after that first hour, the stock doesn't move much. It hit where it wanted to go, and that's it. It usually stays that way for the rest of the day unless there's an economic report that's scheduled to be released 1 hour after the stock market opens. That'll create more volatility. But
Hey, Carlos.
yes.
I'm sorry. When I went on Straddle on Robinhood, it's starting to upgrade to level 3. Is that normal?
So with certain levels like that, it can provide where you can buy a straddle all at once, your calls and puts. But you can also do it at different other levels, lower levels, by buying them individually. You can buy your calls and puts individually rather than doing it at the same time, and that may kind of help train you to have more control over the situation rather than having it buy it all at once. But I mean, that's a preference thing. That's up to you. But like I said, it can be done all at once, or where I would recommend doing it more individually.
Okay. Thank you.
Because, again, the more you learn, the more you'll earn. This is a great milestone advancing into your experience level in education, in the stock market trading and whatnot. But eventually, if you're not utilizing moving averages, I definitely encourage you to start. And I can always help provide you with some nice little tutorial videos on what it is and how to utilize it. Plus, it's always something we can kind of go over and help teach you how to configure your software properly, so that way you can use it as well. Because it's something, it can be overwhelming. You start getting into this more advanced stock market software. There's just a lot of stuff, and it may seem like a lot of gibberish, but that's what's neat about our stock market meeting here, is that we have screen sharing if it ever works. But it allows us to kind of screen share our stuff. That way we can kind of share it with us, and that way we can kind of help each other. That way you can understand things, because it's got to make sense. And if something you don't understand, then we got to make sure that you understand, so that way you can always move forward. And so rule number 5, it says avoid earnings and splits. Unless it's a lottery play, invest lightly. And so I'm just trying to remind you guys that don't go heavy on earnings because of the because it's a risk. It's a high risk, high reward, versus straddling regularly is a low risk, high reward. But because of the implied volatility crush with earning plays, it becomes a high risk situation. So anything high risk, we want to invest lightly, but as long as we're certain about the volatility, then that helps give us something to work with. As we're going over a lot of these earnings stuff, it puts that on our radar, puts it on our watch list. But rule number 6 is avoid straddling throughout the middle of the day to minimize the time depreciation. I'm just trying to remind you that in the middle of the day is like day trading territory. When there's nothing really going on, there's a little bit of volatility that goes down, it goes up, it goes down, it goes up. Those are good little day trading opportunities, but not to hold stock options. If you're holding stock options throughout the day and there's nothing scheduled to happen throughout the day, then you're just going to suffer time depreciation. This was an impulsive buying decision that was made because you did not follow the process or the rules. And so and that is why we want to buy 15 minutes before close, giving us a plenty of time to get into our positions, getting ready for the next trading day. And so these are the basic rules. Of course, you can always modify them. You can always add to them or remove them. I don't recommend removing any of them, but you can always add and make them your own. And that's the neat thing about sharing rules and guidelines with each other, is that it gives us more information to put in our tool belt. And so, God, where were we here?
The rules.
Yeah. So that's pretty much it for the rules. We'll go back to the anonymous profit schedule here. I think we were on Boeing. So Boeing for Wednesday. Looks like option trading volume is elevated due to the company participating in the Cohen Aerospace, Defense, and Industrial. Looks like we are expecting a little bit of a price movement with Boeing, right around 4% by the end of the week. Ford Motor Company looks like they're participating in a global auto conference on Wednesday as well. Looks like we could see a little bit of volatility with Ford Motor Company, probably around 5, almost 5% by the end of the week. Let's see, Cisco looks like they also have earnings on Wednesday after the stock market closes. Looks like we are anticipating about a 6% price movement in either direction. We already talked about Shopify. Let me see, Twilio. My goodness, Twilio. Twilio is expected to release their earnings on Wednesday after the stock market closes. However, we are expecting a price movement around 17% in either direction, most likely probably the downwards direction, because really Twilio sucks. And so they're like what are they, like a telephone voice over IP service for businesses and stuff. It's just not, it's a terrible reception and this and that and it's probably I don't know, but it's just. But either way, we got to look at this as a 50-50. It could go either direction. But with this amount of volatility, 17%, I'm in for straddling with this one. So definitely on my watch list. And again, I will remind you guys the day before on that one as we continue to experiment with our daily meetings now on top of our weekly meetings. So SunPower is also scheduled to release their earnings on Wednesday after the stock market closes. We are expecting 11% price movement on this one, so I'm definitely putting that one on my watch list for volatility. We already talked about Roku, so we don't need to do that one. Going into Thursday, it does talk about the economic reports that were scheduled for that one, which we already talked about. Let's continue looking down on other ones like Datadog. Datadog is also expected to release their earnings on Thursday before the stock market opens, but we are expecting around a 12% price movement in either direction by the end of the week. So that one would also be a good volatile one to put on our watch list. The Scorpio tankers, already went over that one. And Snapchat. Snapchat is a dying stock. It's a penny stock. And as part of our rules too, my rules is to avoid penny stocks when it comes to stock options. So even though we do expect, so it says option trading was elevated due to the company's hosting an investor day. We should see some volatility out of it, 10%. Hopefully they come up with something new, innovating that can help change. Snapchat is, it was like yesterday's news, old news, whatever. There's so many more competitive brands now that, and that's why Snapchat has been a dying stock. Nobody really is using it as much, but we are expecting a 10% movement in either direction. But because it's a penny stock, I'm out. It is not on my watch list because with stock options, it depreciates like crazy. It never really values. The value never really goes up. It usually devalues very, very fast. Avoid it like the plague. Next one is the Genius Group. It says option trading volume is elevated due to the company's hosting an extraordinary general meeting. but we are expecting a 33% price movement in either direction. I'm not familiar with this one. We'll have to do a little bit more due diligence as part of our homework today to see more on what is going on with this. Are they a biopharmaceutical stock, or are they like a financial stock? What's going on here regarding this extraordinary general meeting that's on the list? Because we always want to know what's going to happen before it happens. And that's why we don't really follow these news applications, because if we get these news alerts, it's too late. We need to know what's going to happen before it happens and kind of have an idea. Is it going to provide bearish characteristics or bullish characteristics, or what kind of volatility? There's applied materials there, Veil. Those are okay. Here's one, DraftKings. My goodness. And so DraftKings right here says earnings after the stock market closes on what is it, Thursday. And so but we are expecting a massive amount of volatility. And we've seen some volatility out of this one before, but there's a lot of I think changes. There's a lot of, I think, companies buying each other and whatnot, and so there's, as well as competitors and whatnot. But we are definitely expecting a lot of volatility out of this one, about 13% price movement by the end of the week. DoorDash. It looks like they also have earnings after the stock market closes on Thursday. We are expecting a price movement around 14% by the end of the week. That's a lot. And but as I don't know if you guys follow any of the like Bloomberg or Yahoo Finance, but they've talked about DoorDash in the last several days about how they're struggling. They're struggling to find drivers and whatnot, and so we'll have to see what that does. It didn't sound good. It sounded pretty bearish to me, and so we could easily see a 14% drop on this by the end of the week. Hopefully not. Maybe I'd like to see them do well, but we'll see. But 14% price movement in either direction. I'm in for straddling on that one, but as a lottery play. See, Redfin. Wow, Redfin.
Carlos?
Yes.
I have a question.
Sure.
So most of this video we're concentrating on straddling around earnings as a lottery or playing.
Only because there's the massive amount of volatility. This provides us a great opportunity. Because here in a week or a couple weeks, we're not going to see this amount of volatility anymore. It's going to be dead.
So I can hope that maybe in the next session like this, maybe in the next 2 weeks, could you explain a little bit more about how do you approach the straddle plays if there is not such a large risk applied.
Yeah. So if there's less risk, then we can go heavier on it, and the risk usually comes from the earnings. So and again, as we mentioned before, with the primary stock options that we trade heavily on, it's got to be within the top 3 or maybe top 5 stock options for the day. And so the top 5 is for last Friday was Tesla, Nvidia, Apple, Google, and Amazon. As long as there's no earnings.
Do you ever invest in options against the market for stocks which just experience a big increase or drop in value? For instance, I'm particularly referring now, for instance, to the Lyft, which was like a over 30% drop last week, and I wonder, if you take the chances or calculated risk to buy the calls for a near future for this stock to come back.
So risk. So we always got to approach, when we're doing things very heavily, because when you do things heavily and you're consistent, you're investing like tens of thousands of dollars into stock options. That's a lot of money. even 20,000, 30,000.
I'm far away from this, but
And so we got to be very, very careful. We have to minimize our risks, and there's a lot of distractions out there. We have to focus on the majority. We have to focus on our primary strategy, because otherwise, we could lose a lot, and we don't want that. And so we need to make sure that that we're following a set of guidelines and rules. And so I just uploaded just a little reminder on the differences between an amateur trader and a professional trader. And this is, because out of sight, out of mind. If you don't have this, I highly recommend that you download it. That way you can print it out, you can look at it. But the main thing that I want to point out to is this part here under the professional traders area. It says professional traders stick to their rules religiously and think process oriented. So the process is just what we've been talking about, where we stick to that process. You don't do really anything else other than that, and just repeating it over and over and over again. Versus an amateur traders will change their trading system after a few losing trades because they're maybe frustrated and trying different things, and because they don't have a process. They're just trying to figure it out, and this is where we can kind of learn from each other to that way every person can create their own process. But again, we want to avoid being distracted and doing other things and whatnot. And with Lyft, Lyft is, even though it was a great opportunity, it never really made it in the top 5 area, but I think it did make it somewhere in the bottom. Anything like that, you could do it as a like a day trading opportunity where you can kind of just quickly get in and get out, but not really recommended though. It's just because a lot of times too, like in the last, what was it, Thursday, when Lyft was down a lot, it had a very high percentage call ratio, and but sometimes when things are down significantly like that, like Friday, Lyft was down, negative 36%. People could be buying calls and they're losing, and they're buying more calls, and that's where we're seeing a higher call percentage ratio because they keep buying more and more of it. When really this type of bearish characteristics could continue to happen the next trading day, and that's what happened between Thursday and Friday. And so it just kind of continued, and we can continue to kind of see the same thing going into Monday. I mean, that's a lot of momentum. I mean, that's like a snowball effect. That's a big snowball. It's going to take a lot to stop that. It's going to take at least another day to stop that. We could see Lyft down another 5, 10, 15%, half of that. And then maybe the next day it'd be half of that, until it starts to cool down a little bit. In other words, what other professional traders will also recommend is to always go with the flow, follow the momentum, follow the money, but for the most part, you never swim upstream. You swim with the current, and if the flow is going down, you just follow it. Don't counter it. Just go with it. Don't fight it. Ride it. But again, for the most part, follow the structured approach, follow the majority. Our rules and guidelines is just always straddle no matter what. Don't think that because I had somebody tell me once, if you think you have the stock market figured out, that is when the stock market has you figured out, and that's when you're screwed. The only way around this is to always straddle on a daily basis, no matter what. Because you're covered. You're covered no matter what the stock market does, but factoring these particular rules and guidelines to ensure that we'll be okay.
Hey, Carlos.
Yes.
Is there a fee for the straddle account?
No.
If I sign up, there's no fee.
No, there's no fees. It's just like buying shares, but you're buying contracts. You know, you can get in, you can get out. Though the same day trading rules apply, where if you have an account less than $25,000, you have three day trades. You know, but a day trade is when you buy today, sell today. What this is, it's like kinking the system. Where it's like day trading, but we're not. This is considered a swing trade, so we have unlimited of this type of straddling ability, where we buy 15 minutes before close, because what we're doing is we're preparing this for the next trading day. So we're selling them, whether it be at the same time or at different times, every day. So we always have something to work with, and it feels like day trading in a way, but we're not. But once we get our, it's funny because, you know, many years ago when I finally mastered the strategy, and I got my account, because I started with $500 and I lost it. I started with another $500. I was like, okay, you know, because I was, so the professionals have this weird saying, is like 90, 90, 90. I'm like, what is that? And they said, so for new traders, they said the 90% of new traders lose 90% of their capital in just 90 days. And I'm like, oh no, that's not going to be me. Oh, it was. I lost that, and then so I lost. I was like, okay, I'm gonna try it again with $500. I'm gonna do things differently. I got to learn more. The more I learn, the more I earn. I had to master moving averages. I thought penny stocks was the way to go, and I kept digging away until I was successful at it. But then I asked other people, how long did it take you to get to $25,000? And some people said, a couple of years, 3 years, whatever. I was like, okay, okay, if they can do it, I can do it. And so so I mastered the penny stocks, and finally it was going good. And but then, option trading became more and more popular, and I wanted to avoid options. I was like, with all the Greeks and stuff, it just sounds confusing, blah blah blah. And, well, then I was like, wait a minute. After a while, I was like, I think I'm ready for options, but I'm going to start trading options as if they were penny stocks. I'm going to try the same type of thing, and that's what changed. I was like, and so rather than looking at the Greeks and stuff, I had to apply certain rules. I had to learn from other people, because the ones that were really successful for a long time, for long periods of time, are the ones that are straddling. People that are just picking one direction, those are the ones that may be doing good for a little while, and then they do terrible. And so I did not want to be that. I want to be the guy that's consistently successful. But by the time that I finally got to $25,000, I had unrestricted the day trading restriction. But I felt like I was back at zero. I did not want to jeopardize that $25,000 anymore. So what? Yes.
I have over 25,000, and why is it that my 3 day pattern is still there?
Okay, so what you're getting is a warning. So what you need to go in your settings, and you need to disable that warning, and that way it'll leave you alone. It's just a setting. In other words, and I hate to say it, it's an operator error thing.
Gotcha.
But
thank you.
But if you have trouble finding where that setting is, we can always try to do a screen sharing, and that way we can kind of help you out. But yeah, it is a setting. You just got to go in there and just got to turn it off, and you're good.
I know how to find it. I just didn't know if I had to. I thought the operator was going to do that for me.
Oh yeah, no, it won't. Unfortunately, I wish it did, but no, it doesn't.
Gotcha.
It maybe because it's a security thing or something. But so the one day, so I was at like $24,000, and the day is almost done, and I didn't really want to jeopardize my I didn't want to be the pattern day trading thing, but I knew I was at $24,000. I was almost at 25, but the rule is, but you have to be at $25,000 by the end of the day. So what I did is I went into settings, I just disabled it. I'm like, fuck it. I'm going to get to $25,000 today. Today is the day. I kept day trading, grinding away at it, and finally by the end of the day, I was at $25,050 or something like that. And so so the next day, when the day resets, that's when when the broker software system looks at it, and they're like, okay, you're good to go, you're good, and they won't bug you anymore. So the idea is to try to get to that $25,000 by the end of the day, and that will unrestrict you from. But if you're under that by the end of the day, and you have a lot of day trades, that you're going to get penalized for 90 days. Oh, you could get a slap on the wrist where you could potentially lift that temporary restriction, but usually you only get one of those. But
Gotcha.
but the majority of traders out there, their accounts are less than 25. But eventually, and that's why our goal here is to get everybody to exceed that $25,000 area, and even get to $100,000. Because this is the stock market has the ability to provide everyone here an unlimited income, and this is going to change everyone's lives. There's no reason everybody should be having a day job, working 9 to 5, helping somebody else's future. This is retirement. This is time to retire, to enjoy your life, and to help others, friends and family members, and this is it. This is our source of income, our primary source of income. The only reason why somebody would want to have a job at this point is for maybe something to do, or just whatever. But this is a lot of fun. This is and it's more it's better if we're engaged throughout the day, and that way we can watch things as they happen. And so that's why we do what we do. And but yeah, so let's dig back in the weekly stuff here. And so Redfin, as we talked about, has earnings after close on Thursday. They were expecting a 21% price movement in either direction. Obviously, homes aren't selling as much as they were because the interest rate prices are just way too high. This is part of the whole economic plan for increasing the recession, and which we could talk a little bit more about too here in just a little bit. Let me see if I can find my chart on that, because sometimes it's good as a reminder where we're at with the market and the recession. And so let's go back over here really quick. So this is the I'm going to mute you really quick because there's some background noise. So the recession. So with what I have pulled up here on the screen is our economic report. I mean, not economic report, our economic cycle. So right now we're right around the market bottom right here, and there's times where we need to buy certain stocks. Like for example, technology stocks or finance stocks or cyclical stocks. But you'll notice since we were at the market bottom, the market will begin to recover and will soon begin to enter the bull season and the bull market. But you'll notice that the recession line continues to go down, because the government's not done. Their government's trying to increase interest rates. They're trying to lower inflation that they originally created themselves. And so but it's a confusing time because people may expect the market should continue to go down while the recession continues to get more aggressive. It does not work like that because the Wall Street and investors they see the light at the end of the tunnel. If they see the light at the end of the tunnel, that's when where the market starts to go up. Because we're almost at the full recession mark. Once we're at the full recession mark, now it's time for the recovery. Which really we shouldn't start to see a recovery till 2024, after the year. Hopefully, the government will start doing what's called interest rate easing. Most likely we'll have one or a couple more interest rate hikes that'll help intensify the recession. But after that, they'll start doing interest rate easing, which my guess it'll probably start being which they'll start doing in the beginning of 2024, and that's when we'll start to see this whole early recovery thing and whatnot. But the market will be at the top at that point. Now that's the time, and this should be right around the fourth quarter or first quarter. That's when we want to get rid of what we bought at the market bottom. We want to get rid of the finance stocks. We want to get rid of the technology stocks. We want to get rid of the cyclical stocks. Buy energy, gas, oil, or the basic materials like metals, gold, silver, things like that, because those will be very, very low. As we get into the winter season, that is always the time where energy stocks does the best, because the whole country consumes a lot of energy to heat up their homes, and there's a lot of traveling and all kinds of stuff. So that is when, so this is a good time to get out of your long positions. If you got a 401k or you got a money market account, this is the time to switch it up a little bit. But it's easier to see kind of what's going on and what to expect here in the near and the late future. Again, always know what's going to happen before it happens. So Redfin, again, that they're more part of the real estate industry as more and more people are no longer buying homes because it's just too expensive. We are seeing that home values are depreciating a little bit. We're seeing 1%, 2%, sometimes 3%. Though what did I think last month the homes went up a little bit. I think 1% or something like that. So it's doing a weird thing, but overall they're not selling. And so we are expecting around a 21% price movement in either direction, but most likely it's probably going to be in the downwards direction. So I would still probably straddle on this one, but I feel like I should do puts with it. But it's rather to be safe than sorry. But again, it is a lottery play, and we can just put puts on it as a lottery. So any other big earnings we have? So Friday we have Travere Therapeutics. Option trading volume is elevated due to the FDA's target action date to review a new drug application under the subpart H for the accelerated approval for the whatever that is for the treatment of IGEN. I mean, I have no idea. I'm not but penny stocks. I mean, when we were into penny stocks, we got to make sure this is not a penny stock. But most therapeutics, pharmaceutical stocks are usually penny stocks. But we are expecting around a 20% price movement in either direction. We just need to make sure that it's not a penny stock. Anything else? Okay, so that. But again, we'll go over these more throughout the week as a reminder. But I do with a lot of these scheduled events and everything. It's very, very important to know when things are going to happen. Now, just as important to know when the President of the United States is going to talk, as well as when the White House is going to talk. Even though there is a schedule for that, but these schedules are usually revealed the day before. And there's a website. If you just go to Google, just type in the president's schedule or the Joe Biden schedule, you should see this fact-based website that should provide you the schedule for their events. And usually these events are usually scheduled throughout the middle of the day or during power hour. And again, the government schedules all these events for these volatile reasons, to give more volatility during power hour or towards the end of the day. That way it gives us more of an opportunity, a good trading opportunity. So if you don't have this bookmarked, I definitely highly recommend that you do and start utilizing it, because it's just going to provide you more highly valuable tools to use for your benefit. So Friday, and so these times, these are all scheduled for Eastern time zone. So it depends on where you are within your time zone. You may have to do a little bit of calculation to make sure that you are receiving it exactly the time that it's being that it's happening. Now, when it's scheduled to happen, for example, this one right here was scheduled for 1:30 on Friday. PM, and so this is kind of like in the middle of the day ish, and but a lot of times they're late. If they're too early, with this, they're usually late. And so, but what we want to do is we want to go to YouTube, type in the White House live, and 15 minutes before this event is scheduled, because sometimes they'll already be tuned in. We'll hear sometimes the journalists, they're talking about stuff, whatever. Sometimes we can eavesdrop into what they're talking about, but sometimes we'll have a person that'll come out giving us hey 2 minutes before it starts or 5 minutes before it starts. That way we can listen to it live. the advantage to listen to these events live is because Wall Street is as well. All these other investors, multimillionaire, billionaires, they're all listening to it live. They're not relying on the news for this information. If you are, you're leaving money on the table because it's too late, because the market is reacting to it as it's happening. So it only makes sense that we do exactly what all these other guys are doing as well, not relying on the news applications, because those news alerts, this stuff could have happened 30 minutes ago, and the market is already moving, and everybody's like, what just created this big drop or surge? What's going on? Well, you could have known by knowing the scheduled events and listening in, because maybe the White House said something that investors don't want to hear. Maybe they said something that scared Wall Street investors, and they're thinking, oh, we got to sell now. This is not good, especially with this whole, the over the weekend news stuff with this second or third flying obstacle that was shot down. Maybe they could announce what it was, and it could give us some information on maybe we are going to war or something, or maybe it is aliens or something. I mean, who knows? Either way, it could provide massive amount of volatility in either direction, and that's why we need to listen to it. But when these happen, as we're listening to the White House or the president, usually if the market is going to pick a direction, usually within 5, 10, or 15 minutes. If it doesn't, then that means that most likely nothing's going to happen, and then the market is going to resume where it left off. And so, but that could provide us a good opportunity to start buying maybe calls or shares or whatever. Because if the market's not reacting to anything, because maybe they haven't said anything that's going to spook anybody, then and the market's going to continue to resume where it left off. So it's time to take advantage of that now that we know nothing's going to happen, nothing bearish is going to happen. So hopefully it'll continue being bullish. So now we can start buying the calls. Look at the moving averages, and you'll see now it's time to buy the calls. And then we can buy our puts maybe 5, 10, 15 minutes before close. So we can utilize all this information for our advantage to know what's going to happen and when it's going to happen. Now, a lot of times when the president's going to talk, sometimes there may be a little subject of what he's going to talk about. Just trying to find a day because he's not always talking. It's usually a bunch of, he's traveling, he's doing things, meeting with people and whatnot. Now, these schedules are released at midnight at Eastern Time or at 9 p.m. Pacific Time. So anyone on the West Coast gives us a little bit more of an advantage, because a lot of us at 9 o'clock are still awake and up and at 'em. And so that way we can tune to this to kind of see what the next trading days is going to be like. And that's why when we do our late night stock market meetings, our daily meetings that I'm wanting to do, that's why this is another reason why we're doing it at that time, is because we can kind of look at this as well to see how they have the next day scheduled like. And so but yeah, I can't really find anything to really use as an example. But let's see. Okay, here's one here. So this was Friday the 3rd. It says the president and vice president delivers remarks. That's the key thing. Delivers remarks. That means they're going to talk. It's going to be public. The whole world is watching on the progress of the country has made their work implementing the Biden-Harris economic agenda that continues to deliver results for the American people. And so so at least we can kind of have an idea if this is going to provide bearish characteristics or bullish characteristics. Though keep in mind, the stock market does not like Biden. And sometimes when you see this, it would normally you would think that this would provide bullish characteristics, but only if the market liked the Biden administration, but it doesn't. It absolutely hates the Biden administration. So something like this will provide the opposite effect, providing bearish characteristics. And I believe on Friday the 3rd, it did just that right before close. And so it's good food for thought, good to know, type stuff. But it's very, very important that we always look at this as well as and as a reminder that that quantitative tightening is not done yet, and it won't be done until towards the end of this year. But it is scheduled to be less aggressive as we get into our bull market or the bull season. But for now, it's quantitative tightening is still twice a week. And if you're not sure, if you're new to this, or don't know what quantitative tightening is, sometimes we'll refer it to QT. But quantitative tightening is when the government sells stocks. Quantitative easing is the opposite. Quantitative easing is when the government is buying stocks. Now, when the government intentionally closed the economy down during the second quarter of 2020, they knew it was going to crash the stock market very, very quickly. And once it reached its bottom, they initiated quantitative easing, where they started buying billions and billions of dollars worth of stocks. Though this is a scheduled event, just like all these other events that we talk about, so quantitative tightening or easing isn't anything that the government is ever going to mention that they do. It's never going to be announced. Though it is information that it is required to be revealed to the public. But from what you do with it, that's on you. But the news media, they're not going to talk about it. Some YouTubers, they might, because it's still there. It does provide a massive amount of volatility. And so just like, Thursday was very, very bearish. Thursday, the 9th, the government had scheduled to sell $11.8 billion worth of stocks. That's a lot of stocks to sell. That's just trimming fat right off the stock market on top of whatever bearish characteristics were that day. When the government or anybody sells $11.8 billion, that's just going to trigger more people selling stocks because they don't want to lose whatever gains that they have. So Thursday, and then it bleeding into Friday as well. It just kind of continued that momentum. So that's a lot. And so, but through time, it'll start to be much lower, and it will have less of an impact. So, but Tuesday, this coming Tuesday, the 14th, the government has scheduled to sell $2.2 billion worth of stocks. And so that might not have as big as of an impact as it would, as if they were to sell $11.8 billion worth of stock. So, but $2.2 billion worth of stocks being sold could potentially be easily pumped back into the stock market, recovering that. So, 2.2, that's not that much, as well as some of these other ones that we'll see here later on. But seeing this executed twice a week, the market is struggling to recover, but once we get into where they're doing it once a week, which is, let's see here, what was that, May? So let's see, what is it, May? No, let's see, June? No, June. I think it's, June. So that's usually the summer season. This is when this is our full-on bull mode, is a summer season, and so and the government knows this, and so that's why you can see that the quantitative amount is greatly reduced. Now it's cut in half, and rather than executing it twice a week, we're doing it once a week, and then as we get deeper into the summertime, it's once every couple weeks, and then once a month. So as we get closer into that period, as the investors begin to see the light at the end of the tunnel is getting bigger and bigger, and that is when the market begins to really, really recover. And it still says that even when we get to that point, it still is recommended to buy more technology because it's not done yet, buy industrials and the basic materials. And so... But yeah, so like I said, it's very, very important to know all this stuff because it has a major impact on the entire stock market system. So let's take a look at, so if you don't have the stock market calendar, again, it's always important to know what's going to happen before it happens, but it's always good to know, certain things like triple witching events or holidays, and a holiday is coming up, not this week, but the week after. On Monday the 20th is President's Day. So again, that's right here on February. We see a big orange circle right on February 20th. Anything with a big orange little circle, a solid circle, is a holidays. That way we know that we're approaching a holiday week, and usually holiday weeks have a very small amount of scheduled events, and they usually have a very small amount of volume. So there's not a whole lot of volatility on holiday weeks, and usually it can be kind of bearish for the most part. So always good to have a stock market calendar amongst all of your other tools. So the stock options. Looking at stock options for Friday, right before close, Tesla had dominated the entire list at 4.9 million in options volume. And volume resets itself every day. Volume is a current day's buying and selling activity, and Tesla had a lot of it. But out of this amount of volume, we see these calls and put ratio. And again, a call is betting the stock is going to go up, or a put is betting against the stock, betting it's going to go down. So Tesla and traders, stock option traders, are betting that Tesla 52% chance it's going to go up, 47% chance it's going to go down. I'm looking at that as 50-50. 50-50. Nvidia is basically almost 50-50. Apple's 50-50. These guys don't know what Monday's going to be like. And that's good because, again, weekend news, we have those flying obstacles being shot down. We didn't know there was going to be a third one because that happened yesterday, but weird things are happening. Uncertainty, we talked about uncertainty in the beginning of the meeting. Uncertainty always creates bearish characteristics. And so, but these guys, they're straddling going into Monday, not taking any chances, but they got something to work with now. And that's how and that's what we want as a pro trader. We always want to stick with our structured strategy, but sometimes we can see unusual activity. Unusual activity could be because when we're looking at this stuff regularly on a daily basis, we normally know what's on here, what's not normally on here. But when we see something that's not normally on here, we got to consider that as unusual activity because it's not normally on here and now it is. And so we need to see what's kind of happening, because sometimes we could see something with really weird ratio, because normally a normal ratio is 50-50 or maybe 60-40, 40-60, whatever. And so, but sometimes we could see something that's like 30-70 or 20-80. Is like, wait a minute, what's going on there? Because something could potentially happen before it happens. Like for example, back when GameStop was manipulated, GameStop was $3, $4, $5 a share, but all of a sudden it showed up on this list when it normally wasn't, and all of a sudden it was being pumped up. We're like, what is going on? It had like an 80-90% call ratio, and that's unheard of. So something weird was going on before it made national news. And this is like our radar, even though it's kind of considered like a screener or scanner. This is our radar that we always want to see things that could potentially be flying under the radar, like Coinbase right here, which isn't normally on the list, but it's on here. It's $57 a share, but it was down 4%. And but we have a very large amount of a put ratio at 65%. It's not unusual, and normally things around just like the earnings ratio. 65% is about average. But 65% ratio for puts. But we can see that's higher than anything else on here on this entire page. So investors are continuing to bet against Coinbase, betting it's going to go down. Now, if we click on the option volume leaders, we can see the most active individual calls and puts rather than the whole entire system. But when we're looking at this, it's important to look at the DTE, which is the number of days until it expires, because if it's at 0, then that means that this particular call or put is expired, and we want to avoid it because it's going to disappear Monday. We can't use it. So we got to focus on the ones that are currently available. So right now we have a Tesla call and a put, great, straddling, ability. And we can see here we have a $200 call and a $200 put, as part of our rules to try to always be at the money, always at the share price as much as you can. If you can't, that's fine. When sometimes the share price is right in the middle of two strike prices. We have a thing called straddling, and then the other thing is called strangling or strangle. The difference between the two, they both have the same concept where we're betting a stock goes up and down at the same time. But the difference between a straddle and a strangle is that a straddle is the same strike price. A strangle are different strike prices, because if the share price is right in the middle of two strike prices, you can have the higher one as the call and the lower one as the put. That is considered as a strangle. But for the most part, we just refer it as a straddle here. But if we want to get technical, it is considered a strangle, where one is higher and the other is lower. But we don't want to be out of whack. We want to be, like I said, right around the share price, or right at the share price. And that's what these guys are doing. And so we see volume and we see open interest. And if you're new to stock options, open interest is the total number of open contracts that have been traded but not yet liquidated via offsetting trades. That means that they've been bought but not sold yet. So we can see from prior to today, we can see that we have 38,000 people that bought, they're holding it going into today, and now we see 101,000 people, because volume is the current day's buying and selling activity. If the volume was less than the open interest, then we don't know if it's more buying activity or is it more selling activity. Maybe it's a blend, 50-50. But if it's more than the open interest, then that is telling us that is pure buying activity. People are buying a lot of this, and same thing with this one. So they're buying more of the calls over the puts, because maybe they have a 60% ratio a call ratio and a 40% put ratio. There's certain limitations, and that's a good limit. I don't recommend going any more than that, because if you're wrong, at least that 40% ratio will help keep it either at a wash, or it could still benefit you by gaining. And so but this is just highly valuable information to continue to kind of look at. There's another Tesla put, $190, that's still currently available. There's another put, a couple calls. Tesla, very, very active on this, but we do have a Google call. Google, which is currently at just under $95, but we have a $100 strike price that expires this Friday, February 17th. Had an open interest of only 40,000, but we do have a volume of 48,000. I wish it was a little bit more, but and it's the only Google stock option on this first page. But at least it's over. At least the volume is over the open interest. So at least it does show us that it is more buying activity than selling activity. There's an Nvidia put. That's expired. That's expired. Okay. There's an AMC call, $10. Oh, wait a minute. You guys remember? We just talked about AMC in our meeting. So remember, let's go here. AMC was right here. AMC, boom, right there for Monday. It says option trading volume is elevated due to the company paying down another $85 million of its debt, bringing its 2022 and 2023 debt repayment to $365 million, which is still a lot. But paying off debt, that's always a good thing, right? And so, where were we here? And so, going right back here, I gotta mute you. A little background noise. So, but again, this could provide us some insight on why investors are betting that AMC, which I put that in a manipulated stock category, which I like to avoid manipulated stocks because they're manipulated. They usually don't have a lot of volume. I mean, not a lot of volume. They usually don't have a lot of, well, they have a lot of time depreciation, a lot of time decay. And so, because there's just a lot of people that get in and out of it way too fast, and it just doesn't maintain it. But but sometimes we can look at that as an opportunity to buy shares rather than and even if you don't want to be involved in stock options, it still provides us a massive amount of valuable information, because What if you do buy AMC at a $5 a share, and it does get to $10 in 35 days? March 17th, you just gained a 100% because you bought it as a share, rather than a call. But if you bought calls on it, then that could be highly beneficial. But we can see that the open interest was 149,000, and now the volume is 47,000 in just one day. But because the volume is less than the open interest, what if this is them selling this call strike price? We don't know, unless we go into Monday morning after the stock market opens. If they're buying this to hold, then the open interest should increase. But if they sold it, then that means the open interest will decrease. So to be determined, you guys. So AMC is, it's going to get some attention tomorrow. So we definitely want to put that on our watch list just to see kind of what's really going on. A couple more Tesla calls. Looks like some more straddling. But and so the first page can provide a lot of valuable information, but very quick information, very short-term type stuff for day trading or swing trading type of activity. But maybe you don't have a lot of time to trade. Maybe because your work or whatever you got going on, you just don't have a lot of time to look at and monitor this stuff. That's fine. But there's a trick here to that for those types of traders and investors to sort this page out by open interest. Let's look at this by the highest open interest. And so we click on it, it'll refresh it. It'll kind of refresh that little table by the highest open interest, but then now refresh the entire page. And what will happen is it refreshes the entire system by the highest open interest. And we have a lot of AMC. My gosh, I don't think I've ever seen this much AMC, individual calls and puts, by the highest open interest. Something is going on, and it's obviously it's this debt repayment thing. And so, man, that is a lot. And so, but let's see what's going on here. So we have a lot of puts here, but a very small amount of volume, but a lot of open interest. And then we have a couple calls. We have a call there, but it looks like mostly puts. We have a $2 put, $3, $2, $4, $10 put. So that one's obviously already in the money. Just some weird stuff going on with AMC coming up here going into Monday tomorrow. But we're also going to see, American Airlines, which is currently at $16, which is a lot. During the pandemic, when the government shut down the economy, it was $5 or $9 or whatever. But we do see a $5 put strike price that is set to expire in a year from now, next January 19th of 2024. This open interest is pretty high, 99,000, but we're slowly accumulating some volume. But as someone that wants to utilize this for maybe buying shares, you want to look for a call that's much greater than the share price. And so let's see if we can find one. So for example here, this is a pretty good, this gets talked about often. Mullen Automotive, right? Am I saying that right? Let me see here. Mullen. They're an EV company, Mullen Automotive Incorporated. As much as we want to avoid penny stocks, especially with something like this, but it's so attractive. Being a technology stock, especially an EV stock. Normally we would want to avoid these if for example like the Nikola or Workhorse. They don't have anything really that they've really produced. They're not really taking orders. They're not delivering vehicles. However, Mullen is. You can go on their website. You can let's do it together. Let's take a look here, and let's just take a look. From my understanding, They are taking orders. They're taking deliveries. I think people are starting to see them on the road. Not very many of them. we see specs. Look, we have reserve now. You can buy it. That means that means this company is going to grow. Purchase price from $55,000 because they're now within the government or Biden's guidelines for that $7,500 electric vehicle tax credit. So that helps. It provides incentives to people to buy this product. So you can and it's $100. Anybody has $100. Any 18-year-old with a credit card can reserve this. That gives Mullen an opportunity to help manipulate their numbers by saying, oh, we've had record-breaking reservations, record-breaking deliveries. This stock can easily go beyond $1. I'm surprised it's not at $1 right now. We've been through this before with other stocks like NIO, though we've had a lot less electric vehicle companies out there, but there's more competition. The thing that I don't like about this stock, and it's really the only thing I don't like about it, is because it's under $1. Anything that's under $1 is at jeopardy of getting penalized by the stock market system or Wall Street. And what I mean by that is that they can get fined because part of their rules and regulations, when you're a company listed on the stock market system, there are certain rules you have to follow and one of them is like releasing your financial earnings every 3 months. The other one is to maintain a stock value of $1 or more. If you're under $1, you're at jeopardy of getting penalized by either getting fined or delisted. There are certain things that a company can do to prevent getting delisted by filing for an extension for more time so the company can try to figure it out. They have to pay a lot of money to do that. Or they can opt in for a reverse split, meaning where they merge a bunch of shares into one. It could be 10 or 20 or 50, however many that they agree on. But when they do a reverse split, again, all that does is it helps the company buy more time to help figure things out. That still provides bearish characteristics. But, these investors, it looks like that they could potentially be optimistic because we have a $1 call strike. Now, Mullen has reached 50 cents here, several times, but it always seems to fall right back down around that 30-cent range. Then it goes back up to 50 cents. But if we buy this as a share around that 36 cents there, and it gets to $1, you just gain 200%. And if it gets to $1, obviously it can easily get to $2 and then $5 and $10 and so on. And if your cost is at 36 cents a share, I mean, you're going to feel like I just got this for free. It's like I stole this thing. So, but there's also another website that we can go to. Let's go back to Google. It's kind of a cool thing to kind of look at when it comes to the automotive industry. So if we go, I think top automotive by market capital, we should find a kind of a Google spreadsheet. Hold on here. Top automotive companies by market cap. I don't know why market cap. It was a Google. Oh, right here. So there's top 25 automakers by market cap. Is a Google Documents. So I click on it. It's updated every single day. The top automotive industries on the planet. And so Tesla, for the longest time, for generations, it was always Toyota. Toyota was always the number one. Tesla was always on the verge of bankruptcy, but it made it through. I'm not going to go over that story now, but it made it through. It's right here. But over time, we used to see a lot of Chinese electric vehicle companies on here, not enough American companies. But through time, we started seeing some more. But at least this is something we can kind of monitor to kind of see what companies where they're at in their place in the automotive world. And it does show like the market capital, like the company value, and share price and whatnot. What part of the stock market is it listed on? Is it part of the United States stock market, or is it in like Germany or whatever? But so for American companies, yeah, we have Tesla, We have General Motors right here. We have Ford Motor Company. We have Lucid, which is now trickled up on the list. And then we have Rivian. So obviously we don't see Mullen yet, but it's definitely something we want to watch. Because if it happens, once Mullen enters the top 25, now they're with the big dogs now. And if they reach the top 25, they could easily trickle up the list. And so it's definitely something we want to watch because it could be inevitable. It could easily happen. And it's better to be prepared for it to happen. And we're seeing little clues of it happening, and this is one of them. So what we want to see as well is if the open interest is slowly accumulating. Right now, the open interest for Mullen is right around 76,000. There's about just under 2,000 in volume for Friday, and that could be buying activity. If it is, then the 76 should turn into 77 or 78 or whatever. And so, to be determined, we'll have to keep an eye on it. So definitely let's keep Mullen on our watch list, because something big could obviously happen at any point. So, but yeah, so just some cool, tips and tricks when it comes to utilizing stock options for your advantage. Hopefully this has made a lot of sense to everyone. Anybody have any questions? Anything anybody wanted to go over? You may have to unmute your mic. If you don't have any questions, I'm assuming everything makes sense and we're ready to rock and roll. Because I don't think I have anything else. We pretty much went over all the most important stuff that has the biggest impact on the entire stock market system, as well as finding any other, anything flying under the radar. All right, guys. Looks like nobody has any questions. We are ready to rock and roll. So, tomorrow we could have some live trading if we wanted to, or as well as we'll do another late night meeting. We'll do it. We'll do it Monday, Tuesday, Wednesday, and Thursday night. It'll be midnight Eastern time or 10 p.m. Pacific time on the West Coast. So I know a lot of people on the East Coast, they'll be asleep, but at least they'll be able to watch it during pre-market before the market opens when they wake up. So that way nobody's missing out on any information or opportunities. All right, guys, thank you very much for attending. We'll see you tomorrow. Make good choices, good luck, and any questions, don't hesitate to ask.